All right, so let us go ahead and move on to daily pivots and Fibonacci. Okay? All right, now I could probably spend a lot of time on Fibonacci by itself. Pivots are not complicated at all. But let's go ahead and talk about what these are in terms of support and resistance, because I think that is very relevant. So I'm just going to clean this chart up a little bit. So all we've got is the grab, the 200 period SMA. So when I want to utilize pivots, you can see here I've got my IBFX daily pivots. I'm just going to drag and drop it right on my chart, and boom, I've got my pivots. Now, pivots are calculated from the open, high, low, close of each session, which is to say each day. So each day you've got a brand new set of pivots. Now, pivots don't come from the forex market. Okay, pivots came from really a futures and stocks thinking, because there is no close, right, in forex. So how do you get an open, high, low, close? Well, that's the first challenge of pivots. My opinion is to basically close with London. And one of the things that I am doing with the crack programmers over at IBFX is we're looking at designing a pivot tool, which really does something that not a lot of pivot tools, never any of I've seen, okay, that lets you determine when to end the market, okay, when to say the market's closed. That's a big part of pivots as far as I'm concerned. It's almost like this dirty little secret that nobody talks about in the pivot world, okay. Most people will see that pivots are available, support resistance information is available freely on a number of websites. Obviously, it's not difficult to get a plug-in and overlay it on your IBFX4 platform. But one of the things that I was sitting down with the programmers talking about was that, you know, one of the things that I like is to be able to determine the open and the close of when my pivots will look for the high, the low, and use that open and close. Because that makes a difference as far as the calculation, doesn't it? So that's something we are in the works of doing. So one of the things that I requested after using the pivot tool is saying, you know what, I really want an open and close, because what I do on my own tools, okay, is I actually have a 2 a.m. and if you're doing your pivots manually, by the way, if you're doing your pivots manually, I use a 2 a.m. Eastern Standard Time open on Monday. I don't even factor in Sunday to my pivots. I want nothing to do with Sunday on my pivots. So I open the market on Monday at 2 a.m. and the market's obviously closed Friday, but what I do is my close is noon Eastern Standard Time. So what I'm basically doing is opening it with Frankfurt and closing it with London. And after a big discussion of the pairs and the turnover and the times, I hope you understand where that's coming from now. That's why I said it was so important that we spent that time on the times and turnovers and so forth. So I'm going to have it reflect the most relevant trading hours of the day. Period. Does that mean I'm ignoring Asia? No. But if I know the greatest amount of turnover and opinion comes out of Frankfurt and London, I've got to close the market at some point, and I don't want to factor in the doldrums of the post-noon to Sydney hours and things like that. I've got to shut the tool off at some time. I've got to say, okay, this is my open, high, low, close. So again, I use 2 a.m. Eastern to noon Eastern for my pivots. Okay, so if any of you guys are doing this manually, that's probably, in my opinion, the best way to do it. And like I said, I don't know why this concept of when to open and close the market isn't brought up more, but I think it's because no one sat down and decided what hours they actually want to use. So for me to teach you pivots but not talk about time, I'd be doing you a great disservice. We're going to have an adjustment on this in the near future that will reflect that, and I think the default is going to be exactly that. Monday through Friday, open at 2 a.m. Eastern, close at noon, and you'll see there is a slight difference in the pivots. Okay, just as if I were, by the way, just as if I were trading the stock market. Just because the stock market has after hours doesn't mean that I don't want my pivots to calculate between 9:30 and 4 p.m. Okay, it's the same thinking. It's just easier because there's an exchange telling me what the real trading hours are. I don't have the benefit of real trading hours, really, in Forex. So I've got to determine what the best reflection of the overall psychology of the market is. And again, I do believe that to be between 2 and 12, and you guys have seen the data that backs it up now. Okay? So let's talk about what pivots are. They're support and resistance. Pure and simple. What are they calculated using? And this is how we're going to segue into Fibonacci here. They're calculated using price, open, high, low, close. I think pivots are very much a tool that work because so many people follow them, and so many people follow them because they're so, for the most part, objective to calculate. Once you get past that time discussion, which most people do not have, but once you get past that time discussion, they're extremely objective. I mean, the calculation is what it is. You plug the numbers in. That's it. Objective tools are very tempting to use, regardless of the fact that I don't know that using a high-low close divided by 3 is necessarily any kind of real insight into what the market is doing. However, who am I to argue with the fact that so many people watch this, and if somebody feels that at price they're hitting an R1 or R2 there should be should be resistance, they're going to act on that. Same way if people see S1 or S2 or S3 being hit, they're going to expect support there. I'm not going to underestimate the psychological power, the self-fulfilling prophecy of pivots. I'm not dismissing them as only that, certainly not, but that is a huge aspect to why they work, their popularity and their simplicity of use. Contrast that with the outright subjectivity and how complex Fibonacci can be and why it's a little bit of a different tool, but that's doing the same thing. Both these tools are doing the exact same thing. The way they're doing it is different. I mentioned earlier that everything is support and resistance in the market. Everything. Indicators, psychological levels, chart patterns, moving averages, pivots, Fibonacci, you name it. They're all just different ways of determining support and resistance in the market. What's a ceiling? What's a floor? The methodology is just different. So if the calculation for support and resistance is this high-low close divided by 3 and all the other calculations that accompany a pivot, then Fibonacci is based upon the idea of retracing the last significant sell-off or rally. Again, Fibonacci is just another way of finding support and resistance as determined by recognizing the last major move or the last significant sell-off or rally and finding where the retracements are as it tries to retrace its steps, so to speak. Okay, let's get into that for a moment.